To me, a private equity firm should never look at a healthcare vertical and say, God, there's opportunity there.
Yeah.
That means that there's profit exploitation to be had in those areas, and that is incompatible with the vision of affordable and accessible healthcare, in my opinion.
Hey, what's up, guys? Spencer Smith here, host of the Self-Funded with Spencer podcast, sponsored by Pareto Health, ClaimDoc, and PlanSight. Enjoy today's episode. Forget this is the business of risk, right? So you can look backward in hindsight and go, we should have done this or we should have done that. It's like, no, we did this in case this happened.
Right.
This was the reason for the decision. It's easy to look back and say, oh, I could have saved money here or there.
Yeah.
Well, you're buying insurance for a catastrophic, unforeseen risk.
If I could buy car insurance at the end of every year and go back and buy a liability-only policy because I didn't get in a at-fault accident, I'm like,
save
just 80%. Do that. Yeah. Exactly.
By the way, I don't know if you got your home and auto renewal this year. Like they're
in June.
Nightmares, dude. I don't want to get on that subject. Okay, all right, this is a good place to start. So I'm sitting with Taylor Rogers, partner, right? CCIG. Welcome, Taylor. Thanks for coming and hanging out. You've been here for hours already, but
yeah, thanks for having me. Good to be here.
Good to be here. Thanks for taking me to Stars game last night. Dallas Stars won in overtime. That was pretty sick.
Yeah, right? Always good to go to the AAC.
And I didn't know you actually were you're a hardcore Stars fan. You actually know a lot about that. So
I love hockey. I don't know why. I just grew up as a kid in the Dallas Metroplex when the Stars moved here, and just fell in love with Mike Modano and Brett Hull and the whole bit. So
yeah, I remember Brett Hull, Mike Modano. Who was our goalie that was fantastic?
So we had Marty Turco. We also had
prior to him, I think there was a
we had Turco.
It wasn't Patrick Waugh. But there was some guy. God.
Eddie Belfour.
Okay,
Eddie the Eagle. Sorry, and then we had Darian Hatcher, big enforcer defenseman back in the day. So
what's funny, you have this sort of like sentiment. I was big Rangers fan growing up, big Cowboys fan growing up, big Stars fan growing up. You just had this sentiment of a kid of the players in that era, and you just have like a fondness about it. But I'll admit, going last night, I'm not going to make the podcast about the Dallas Stars, but going last night was a lot of fun. And I'm going, why the heck don't I go to more games more often, man?
It's fun, man. Kids love it. We come up, we're in Austin, but we come up 3 or 4 times a year for games, and always a good time.
Good. Well, Taylor, man, we're going to cover, I think, the world of insurance consulting. I think I mentioned this pretty frequently on this podcast. I like to regularly feature the vantage point of the consultant because I think you guys have a lot of great insights, lots to say, and I learn something every single time we do that. So I would love for that to the people that are listening to go, hey, this one is going to be, again, from the vantage point of a broker, consultant, strategist. But before we get into the weeds of that stuff, Taylor, I'd like to get a chance to know you, man, if you don't mind.
Sure.
So can you give us a brief or extended version, however long we go, of your bio?
Sure. So when I was a little boy in Texas, I grew up wanting to be an insurance consultant. So this is all I ever wanted to do.
Well, congratulations, man.
No, thank you for that. I truthfully did on some level achieve what I wanted to do. I always wanted to play baseball, always wanted to be a baseball player. And so I went to Tulane University, ended up getting drafted by the Giants and kicked around for about 5 years. And while I was in college, I studied finance at Tulane and was really on a track to I wanted to go work on Wall Street, wanted to take kind of the CFO track that they had a really well curated program. And unfortunately, I was going to be coming out in 2010, and circa 2009, the economy's in the toilet. I'm watching all of my buddies, disperse and have a really hard time finding jobs. And so I got a call from the Giants asking if I wanted to get drafted after my junior year and go play. And I said, well, there's not much of a job market, so I guess I'll go, play pro ball for a while. And that dragged, on for about 5 years, really enjoyed it. And started to do the math in my head. I'm 27. I'm still in the minor leagues. Haven't made it yet. And the math just didn't really work out to continue to pursue that. So I started to figure out what came next and had a really good buddy working in the insurance business, selling employee benefits. And I knew nothing about employee benefits. What I did know is I was not going to be the quote-unquote jock that went and sold insurance. That just was not in the cards for me.
Okay.
Then I started meeting people that actually worked in the industry, much like yourself, and realized they were all very happy and enjoyed themselves. And it kind of was this hidden gem of an industry, this unsexy legacy business, but with a lot of really, really great people. So took a job at Unum, started working in the ancillary benefits space. In Houston, moved to Austin, did that, and then became a consultant a few years after that.
Well, so let me, a couple questions. I know we covered this a little bit last night, but for the folks that are baseball fans, I know there's quite a few baseball players I've had on before. Position, your pitcher, correct? Right?
Yep, right-handed pitcher,
Right-hander.
which is why I'm here selling insurance.
Yeah,
if I'd been left-handed.
So let me ask you this: if you were left-handed, do you think it'd have been different? Like reality.
So I hope this isn't offensive to anybody, but the way I've heard it said, which I would say is pretty accurate, is lefties are like blondes. They always get a second look, even if they don't deserve it. And so whether it means you make it to the show or not, I don't know, but they certainly get the benefit of the doubt.
Yeah.
Versus a commoditized, tall righty. But no, it was a great experience, but ultimately, called it quits after AA and came and did this.
Well, and before we move into your insurance career, like tell me some of the lessons that you maybe learned, because it is very common, for whatever reason, carrier side as well as consultant side, for folks that either made it to some level of pros or very high level college athletes that make effective salespeople in our world.
Yeah.
So what are some of the things that maybe you think created kind of a basis for you to be successful in this industry?
Yeah, I think the biggest thing for me was realizing how the absolute 0.001% prepare and play. And so much of it goes on behind the scenes. They work their tails off. And what I realized is when you get to that level, you're not just trying to be really good. You're trying to compete against literally the best in the world.
Right.
And so I think what I've taken from that is now that's kind of the perspective I take to the insurance business. I think there's a big trope, more or less, in our industry that brokers are just a bunch of, self-serving golfers, that like to have a good time and cut it up at parties. And first of all, I don't find that to be the case. I think there's a lot of formidable competition out there, a lot of really intelligent people with all sorts of backgrounds. And, for me, I don't just want to outrun kind of the lazy or lousy, archetype that's out there. I want to compete against the top 0.001% in our field. And so for me, I always assume competence, when we're working on a case or whatever.
Yeah.
That all just comes from baseball, because if you're trying to crack a big league rotation, which at the time, we had Tim Lincecum and Matt Cain and Barry Zito and all these guys up there. Like, if you're going to be that means you have to be one of the absolute best on the planet.
Yeah.
And so, I think that's it. It's just and the other thing I would tell you, sorry to ramble on this, but the other thing I would tell you
please.
is it's as small as how much sleep you get every night, because that's going to impact your rest and recovery for how you can train the next day. When you only pitch every 5 days, it's like all these little details that take place completely away from the ball field that impact, your ultimate performance. And they don't care how good you are on your best day. It's how bad are you on your worst day, and how often does that bad day happen? Because there's 162 baseball games in a regular season, and you make 32, 33 starts as a starting pitcher. It's really just like, how good is your average? How good is your median?
That's what it is. And I was told this, and I think I shared this with you last night in comedy. I was told that to be like a headliner level comic, you have to be consistently good every single night. You're great often, but your baseline is good.
Yes.
The people that get up on stage or get stage time or get featured slots, they're good, and every once in a while they're great, but the spectrum of their performance is wide. They are not operating at a high level every single night, and that consistency of being good, I think, is a differentiator in sports. It's a differentiator in a lot of things that we do. You were telling me earlier about your preparation, that you assume competence, but you assume you're also going against a top tier consultant in force. Your level of preparation to do that versus assuming you're going against somebody that's of modest capability means you are going to over prepare, but that's going to show through, I presume, in that prospecting process. And I would assume more often than not lead to picking up business. I think it's a great mindset to carry.
Yeah. I just have never seen a lot of value in assuming that the other person's mediocre. And I would assume, going to that on the comedy front, what did you see amongst those guys, like how they prepared, or how, guys and gals, but how they prepared, to go out and perform every night? And
I think what you really noticed that separated people across the board, regardless of style, like you said, guy, gal, young, old, it was the consistency in which you wrote and went up. So if you go up and get stage time, that is how you prepare. And so if you're a really good joke writer, but you only perform twice a week, and somebody's a mediocre joke writer, but they perform 10 sets a week because they're in New York or something like that, that level of repetition is what elevated them a lot faster and helped them reach their potential. So that really was the biggest key. People, all different lifestyles, some are healthy, some were alcoholics. I mean, you obviously get all walks of life in comedy, but I think the thing that was really the most common denominator was a level of effort put into the actual craft itself. That's anything,
Yeah,
right? That's literally
totally.
anything that you do. Natural ability gets you to a certain level, and then when you elevate to a level where everybody else has more, or at least equal natural ability, the level of effort is going to differentiate you.
Totally, and I think having a safe space to fail.
Yeah.
We talked about this last
Yeah.
night with comedy, but I've got a good buddy that's a comedian, and he's told me basically like you have to be really comfortable bombing, and knowing that you're going to get so much more feedback from that. He mentioned Steve Martin as one that. Steve Martin felt like he became a worse comic later in his career because people showed up ready to laugh. And so he didn't know if he actually had good material on a given night because the crowd was always hot.
It was an authentic feedback for him, right?
Exactly.
And I could understand that. Pareto Health is the manager of the largest employee benefits group captive in the United States. And it's also now the main sponsor of the Self-Funded with Spencer podcast. I chose to partner with Pareto Health for 3 main reasons. Number 1, their dedication to improving the world of health benefits. Number 2, their mission to reduce volatility and to make self-funding simple for mid-sized employers. And number 3, the strength and scale of their program. With over 2,300 member groups and more than $1 billion of stop-loss premium under management, Pareto Health is the most robust solution of its kind in the country, period. Stay tuned for more information because I'm sure I'll be featuring them on an episode of the podcast very soon. Visit Pareto Health at paretohealth.com or follow them on LinkedIn to stay up to date on the latest news and developments. Completely. So as you started to transition into the insurance world, right, I think you had that resistance similar to the one I had where I was like, I couldn't envision myself being in insurance. And then I found myself falling in love with it over time. But what were the early days like as an ancillary rep? Did you enjoy doing that?
I actually did enjoy life as an ancillary rep. I think it's a unique role, one that you have to be very personable. You have to be a good listener. You also have to just work your tail off to earn business and earn trust from people. And I feel like as an ancillary rep, you're ultimately earning trust from, brokers that you're going to make them look good, that you're going to do what you say you're going to do, that your quotes are going to be accurate, kind of all the fine detail work, which to be completely honest is not my forte. Mining the details of a 58-page disability contract. But, it was really good for me. It was a good training ground for it. And then coming over to the consultant side I was not ready.
Did you actively seek out the consultant side or did somebody come to you?
More or less. It was brought to me, but I'd kind of been kicking around whether or not it was a fit for me. And ultimately for me, I wanted to get closer to the flame. And when I say that, the flame for me was the actual business at hand.
Okay.
So a company that's building a software system and selling that out to, B2B customers, they don't care about a disability policy. They care about growing their business. They care about their talent strategy, all that sort of thing. Well, selling dental, vision, life, and disability to a broker does not get me in that conversation. It doesn't get me in that room.
So you saw, or at least had the instinct to say, the medical or health insurance space is the space that I need to really get to the fire or the action. Okay.
Bingo.
What was there an epiphany or was there a case you were working on, or how did you uncover that that's the place you wanted to be?
Yeah, so a lot of the success I had on the carrier side, we never talked about ancillary benefits.
Okay.
I would sit and talk to advisors about what they cared about, which was always medical insurance. So I got a free education on PBMs and stop loss and all this sort of thing, and a lot of fully insured education as well, because there's a lot of that going on. I got a big education on that front that, prepared me for it. And it was all just taking brokers out to lunch and asking them what they cared about versus talking about my no missing tooth provision on my disability or my dental contract,
Yeah. Not to diminish those things.
They're great. They're meaningful.
I just cringe at, you mentioned 58-page disability contract. I don't know if I've ever read one of those in my life. And man, I'd probably fall asleep. But important, right? And there's somebody understands the differences in those, the nuances of those, and they can be very, very important differences. But like you said, on a daily basis, these are not the things that business owners are thinking about. So when did you get into the broker-ish space or the consulting space?
Yeah, so I got an opportunity to do that with a large national firm and had an unbelievable mentor, guy that I really appreciated, that taught me a lot about the business. And what I realized with that is, for me, if I was going to go and compete in the larger segments of business that I wanted to write and the clients I wanted to work with, I had to be different. I couldn't go tell the same story that people who had been doing it for 30, 40 years were telling out in the market, because all I was going to do is be worse than them at their own game. And so I gravitated towards self-funding. I gravitated towards cost containment, taking those large claims, driving those down, because we've talked about, insurance is nothing more than, a function of what your health care costs are, right? So for me, that just became the game, and the goal was, how do we drive down the cost of claims? And I started there. I started my career just going straight for it. And I was, like I say, I was fortunate. I was surrounded by a lot of really good people that helped me learn that side of the business.
Yeah, I mean, I was almost 10 years into my insurance career before I really uncovered this gem of self-funding and the possibilities. But the fact that you got to almost kind of start there, of course, gave you a leg up. And then so ultimately, I think I don't know what your tenure was at that firm. Obviously, you broke away at some point and started your own. So what was the mentality there ultimately that said, I want to do this? I want to plant, what was it, hang a shingle is the term?
Yeah, it actually wasn't on my radar.
Okay.
It was a client of mine that had gone very far down the rabbit hole. CEO got very passionate about some of the injustices of healthcare. And that's an interesting side topic, because I've found that for a lot of these companies that dig into it, it's not always about the money. In fact, it rarely is. A lot of it's about the principle, the value, how they run and operate their business. But I had a very passionate, client of mine that approached me, and he said, hey, this has been awesome for us. I don't think you understand how impactful it is to our specific industry, given our margins and kind of how we operate. He said, I want to start a captive. And he started rubbing his hands together. He's like, I want to start a captive. I was like, let's pump the brakes on that one. But what is your thought? And he said, well, look, I'm going to do this with or without you, which meant, oh, crud, I'm going to lose this client, right?
Yeah.
He was like, I'm going to do this with or without you, but I think you'd be a huge asset, and I'd love to do this with you.
Okay.
So fast forward, and we ended up starting a firm. I thankfully talked him out of starting a captive and partnering with, other stop loss options.
Oh, so he wanted to build his own.
He wanted to build an industry-specific captive, to go after his area of practice. And so we pivoted off that, but tried to focus on their industry and just be specialists, speaking the language of that industry. So did that, enjoyed it, had a lot of success, surprisingly, kind of out of the gate. And we quickly realized we needed some infrastructure. And unfortunately, as much as I loved my partners, unbelievable people, they were not insurance people. So they could help us with a whole bevy of things, but they couldn't help us. Hey, here's an agency management system we're going to plug in. Here's this, here's that, And so I found myself spending a lot of time in QuickBooks, a lot of time, just on all these other things, vetting out solutions to grow, the practice. And finally, at some point, I was like, guys, I think it would make sense for us to find a strategic partner, which is what led us to CCIG, who obviously already had all the infrastructure, great P&C practice, a really nice evolving benefits practice, and it gave us an opportunity to keep building exactly the way we were building, with a lot more wind behind our sails. Yeah,
I think, it's one of those things, like, you wanted to consult, which I don't blame you, and you wanted to do all the fun strategy and tinkering, but obviously to run a very successful consulting practice requires a lot of additional, business acumen, infrastructure, systems. You will have to manage life and disability contracts and, all those things. And so then you start really building a business that creates the basis for stability to go out and continue to sell what you want to sell. So that strategic partnership, how long ago was that happened? It was not too long ago, right?
Yeah, that happened in February of 2023. Yeah, February of this year.
Oh, February of this year. All right, so more recent.
Well, so we spun up the firm in March of 21, and then we made it right at 2 years before we folded into CCIG.
Very cool, man. Well, so I think that leads us into where I wanted to spend kind of the bulk of our time. And I appreciate you kind of giving the story. It's always fun to hear how you got here, right? And I think the interesting thing about you, or one of the interesting things about you, is how you got here relatively in a short period of time is a very, very high level strategist around self-funding. You've popped on my radar before. Obviously, the mutual relationship with my colleague Sean Sanford helped with that. But I'm glad to have you here, because I just want to hear kind of about some of the tinkering process in your strategy. And I think you were about to say something, but I was going to ask you.
Oh, no, I was just going to say, that you literally took the words out of my mouth. I'm just a tinkerer, and it doesn't matter what it is. We were talking about coffee earlier. I mean, I tinker with coffee. I was always, when I was playing baseball, I was always in the bullpen tinkering with something. It's just kind of germane to who I am. So
well, and it's a great place to be able to tinker. You'll never get to stop tinkering, right, if you do this effectively.
PlanSight is a complete game changer in the world of insurance brokering. As a broker, you know how time-consuming and error-prone the traditional RFP process can be. But what if I told you there's a better way? PlanSight is the only end-to-end RFP solution on the market made specifically for benefits agencies. It's like having a superpower that gets you an average of 8 to 10 hours back per employer renewal per year. And the best part? PlanSight supports all carriers, all funding types, and all group sizes for over 20 different benefits. If you're ready to make your RFP process faster, more efficient, and more profitable, it's time to call PlanSight. Visit plansight.com now to book a free demo and discover the future of insurance renewals.
One of the things that you said earlier, and I don't know if we captured it on camera or not, but is that you rarely actually say self-funding when you go enter in a conversation with a prospect. So tell me why you kind of intentionally avoid some of that jargon.
Oh, this was one of the things that our business partner, who we started the firm with, started Karen Advisors with, he told us to take it out of our dialogue. He said, stop saying self-funding. And I was like, why? That's what it is. That's what it's called. And he said, it's just a corporate high deductible. He's like, we do deductibles in every area of our business, every area of our lives. We're comfortable with it. He was like, I'm not truly self-funding. He was like, I just carry a corporate deductible, and if it's under the deductible, I pay for it out of pocket. I was like, that makes a lot of sense. And what his thing was, he said, when you use those terms, it feels very scary.
Yeah.
And so he was like, I just would prefer that when you're around me and when we're in meetings together, you just don't use those words. So we were always honest about what it was. We just reframed it a little bit to something that people were inherently.
Well, but I think, I think to his sentiment, right? If you use the jargon that you understand as a crutch to fall back on to explain stuff, you inherently are going to lose people that don't have that same basis of understanding. So if you do leverage terms that they do understand to explain the exact same concept, now you've effectively sold the concept.
Right.
I did a video about this a couple weeks ago. I shot it at kind of my home studio. Haven't released it yet, but I was on a call with a consultant, and it was like this last second whether or not they were going to decide to recommend Pareto. And it was like we kept getting dragged down the weeds of, tell me how the quota share works, and tell me about the infrastructure, and then the capital, and what about, and it was like he was looking for something almost defined to get stuck on, to sort of create the objection to go, I'm not comfortable recommending this. And I'm like, well, hold on a second. I think we're too far in the weeds. Let's go back to why you pursued this in the first place and recommended it in the first place. And oh, by the way, the terms are great. And we sort of changed the framework of the conversation, because if it had gotten dragged too far that direction, getting stuck on the terms, it would have got stuck on the terms and never left, right? And so I do think that there's a lot of really good insight in taking that approach that your mentor gave you. So does it create an interesting dance, though, as you're almost like, or have you sort of not kept yourself to such a rigid standard of avoiding those terms at this point, you know?
Yeah, I mean, we do use it. We do use the terminology. However, what I will say, it translates to all areas of kind of talking about contracts. So we don't talk about captives very often. We push or recommend captives quite a bit. But I typically present it as, hey, I can sell you a policy with a rider that basically protects you long tail, so years 2, 3, 4, and beyond. And I just position it as a policy rider. Well, obviously, as we get down in the mechanics, yes, it is a captive, right? And eventually we'll get to that point. But when we think about adding a rider to any insurance policy in any area of our life, I'm going to pay extra money for this additional provision. That's all it is. It's just an enhancement to the policy. And so that's the way we pitch the captive concept. And then when they get to that point of, okay, yeah, I'd like to buy that rider. Okay, well, this is the only carrier, more or less, if we're going to call it a carrier in this case, but this is the carrier that offers that option. And here's what it looks like to purchase and bind a policy with them. And so we present what the feature is and does without going into all the mechanics of how
and I thought my past company CEO kind of framed it like, you get stuck in software, especially hammering features.
Right.
What you need to emphasize is, what are the benefits of doing business with us? Or where are you trying to go? If you tell me where you're trying to go, I can tell you if the benefits derived of using this thing will get you to where you want to go. The mechanics, the features, the blocking and tackling are important and should be addressed in due time and when they are appropriate, where nobody's avoiding them.
Right.
But if that is where you get stuck, that is, again, where you're going to get stuck. And so let's just think about, what are we trying to accomplish? What is the horizon we're trying to accomplish it on? If this vehicle is the thing that makes that possible, I will explain the mechanics when it's appropriate, right? And there's no being misled or anything like that. I think, again, that's the art of selling anything, right? Is how you position it. And so I don't want to move on from this subject, but I know we're going to talk about kind of care navigation, and I think that's where you get to tinker quite a bit. But when you sort of uncovered or discovered by that client of yours kind of pushing you to focus on captives, was there anything that you got stuck on, or was there anything that like you looked at and go, wow, okay, like I think this just makes sense? Because I've had that epiphany in my own life.
Yeah, I struggled with captives for a little while, just trying to understand first of all, you see one captive, you've seen one captive, right? They all operate a little bit differently.
Sure.
I never loved the idea of overpaying for insurance to get dividends back.
Yeah.
That was just something that, to me, I don't like overpaying on taxes to get a tax return, that whole thing. And so for me, I didn't love that concept of it, and I didn't see a lot of other captives leaning as heavily into cost containment, which is really, for me, what I wanted to talk to clients about. So seeing Pareto kind of have an emphasis on actually getting people to collectively bargain more or less to bring in these cost containment packages and vet them out and pilot them and make sure that they work, I saw that as very attractive. But yeah, it took me a while on the captive side just to understand really the value of why it made sense. And then, as we dug further into it, I was like, oh, this is a stabilizing measure for a company to embark on a 5 to 10 year strategy without fear of an unknown circumstance interrupting that, that whole process.
Yeah, and it's one of those things, like it functions extraordinarily well in a lane. It's not for everybody. It's not for your 5 life group for most of the time. It's not for your 5,000 life group. But there is a lane in which it does, to me, become the most efficacious or most effective vehicle to accomplish the goals that we're talking about. But at the end of the day, it's insurance. And it's a function of the risk. And I think that's a good segue into kind of talking about that care navigation component and the utilization of care navigation. But why do you think that is such an area of emphasis for you? And I know that's something you wanted to talk about. What is it about it that you think creates such an impact?
Yeah, so going back to the gentleman we spoke about earlier, he continually told us about his own employees. My employees need a wise person. They don't understand this program. They don't understand how any of these solutions work. It's great that we've got, a dozen and a half, solutions that will reduce the cost of care, but they don't know who to go to and where and when and how to navigate this sort of thing. And nor do they listen during open enrollment because they don't care until it's actually
what do they do? They flip to the back of the booklet and see what their new contributions are, right?
Exactly.
Or their deductible.
And once they get that medical scenario come up, once it comes up, everything becomes an emergency to them, whether it's really time sensitive or not. It's all they can think about. And I know that. I've gone through some back issues and so forth that when I'm in pain, it's all I can think about is getting rid of this pain.
Right.
Doesn't mean it's an emergency, right? But it's still kind of all consuming. And so his point to us was employees need a wise person that can walk them through this, that can be objective, that can be empathetic, that can slow everything down and get them to the right place.
Okay.
And so what we realize is you can have all the cost containment point solutions in the world, but if no one uses them, doesn't matter. And so how do we drive utilization? So I go back to the word utilization. That's kind of what we focus on, is how high can we get that number? Can we get to 80% utilization of the point solutions when they're appropriate?
Okay.
And so we started doing that in-house, basically, where we would assign a nurse to our clients that would basically go through the pre-cert report every day, see what was pending out there, call the members, say, hey, I noticed we're getting a pre-cert for an MRI. Did no one make you aware of the free option? Has anyone told you about this? What we'd find is none of these people knew about it.
Yeah.
Right?
Yeah.
So we started bird dogging those opportunities and then, really realized that needed its own infrastructure and so forth. And so that, now we kind of partner with a group that does that really, really well for us. But
yeah. And so ultimately, when you think of the terminology care navigation, what do you sort of define that as, whether it's defined by outcomes or what it's actually doing? What do you tell people that is? What does that mean to you?
It really just means getting to the highest value option that that's accessible to you and practical. And so high value doesn't necessarily mean lowest cost. It is the intersection of cost and quality. So if I can get better quality for the same price, we want to get you to that person. Because first of all, there's 2 components to this. One is there's no such thing as a good price on something you don't need. We say that all the time. Like,
that's great.
First make sure that you need this thing, for it to provide value. And the second thing is
well, you were making me think of appropriateness of care, right? As you were giving that thought.
Yeah.
But so the first thing was if you don't.
So the second thing I was going to say is it doesn't matter how good the price is. If the quality's not there, you're going to have, 2 knee surgeries is going to be very, very expensive.
Oh, yeah.
Right? And so we have to get the quality piece first.
Okay.
Have to make sure that that's in place and then get you to, now start focusing in on price. And then there's also the convenience factor and the accessibility to the member, because if you're, saving $800 on this colonoscopy, but you're asking the member to travel to Kansas to get it, all of a sudden that becomes a bigger burden than it's.
So then how do you drive utilization, right? Is this communication? Is it incentives? Is it all of the above? Because if that tool is there and it's not being used, then it's wasted money and it's wasted effort. So how do you get people to know it's there, one, and actually use it?
So the incentive piece you hit, that's a prerequisite.
Okay.
If it's not less expensive or easier for the person to utilize it, why would they care if it saves the plan money?
Right.
So incentive is there. We waive cost share anytime they use these programs.
Okay.
Second thing, make it easy. We put the one number on the card for them to call so that that's the first place they go. It's going to the care navigation firm. They can say, hey, oh, you need a dentist appointment. Yeah, we can schedule you a dentist appointment. Oh, you said you had back pain, or you said you need an MRI. Let's talk about that. What is it you're trying to accomplish? Let us help you get access to all the benefits that are applicable to this thing. And it's not just, again, driving them to cost, quality, value, all that sort of thing while it's important. It's also slowing people down to understand, hey, you've got this cancer diagnosis. We're going to get you plugged in with Cancer Care Plus, but also I want to make you aware of the mental health benefits that we've got through this. This could be really important for your family as they're going through a difficult time. Your kids may be worried about what's happening to mom or dad, or whatever, and just make them aware of all they have access to that they otherwise might not have even stopped to think about. So it's all of that.
When I like the fact that you make it very simple on the ID card, right? Because sometimes, especially when you're self-funded, ID cards can be confusing with the PBM listed, the TPA, whatever network you're leveraging. Yeah. Oftentimes, Buka Network will be the most recognizable logo on that card, so that's who the person at the provider's office calls, and it creates confusion. So think about that a step removed with the members going, well, I got this ID card, I don't even know who I'm supposed to call. I'll just do what my doctor told me to go do and recommended me down the street to go to a specialist. So you have created a simplicity, almost like a gatekeeping simplicity, where the natural incentive is, I'm just going to call this one single number I've been given. I know on the other end of that is somebody that's actually going to help me do no matter what I need to do. That it's just a simplicity, dude. So I look at that and go, well, why isn't that sort of the norm? Why is care navigation, an effective care navigation tool, not built into every single plan?
That's its whole episode.
Well, give me the Cliff's Notes here.
Yeah. So the short answer is, it's really hard for TPAs to do this job.
Okay.
It just is, because they're beholden to the covenants that they've got with the networks. They can't infringe upon those. Also, that gets into the whole steerage of care that's prevented by most of those contracts. And we don't want them to be in that position. And so it has to sit outside completely of the plan to truly be objective. And so, that's really the biggest thing. It's just kind of the inherent conflicts of interest.
So you think it should always, I say always, it's hard to say always or never, but more often than not, it should be maybe a third party doing it, that standalones, and that's all they do?
It should always be independent.
And then, so if you are a consultant, right, that's listening to this, or maybe an employer, like, how do you go about validating ones that are good and not so good, right? That kind of ties into my point solution fatigue post, I think yesterday or the day before, where you're just inundated every single day. So how do you parse this stuff? How do you figure out who's actually going to be good at it?
That's a great question. So much of it comes down to the data that you can get from these partners, in terms of, tell me about the quality of these physicians. Tell me, when you're sending out these knee referrals, how many total knees is this surgeon doing in a year? I don't care necessarily, don't lead with the cost, but tell me who these people are that are operating on these people. And when you find people who are really plugged into the network of partners that they've got and how they're triaging things, they tend to do the other things well.
Okay.
The other piece too is empathy, how human facing it is. And the reason I say this, technology is a great tool, but when you are scared, when you are going through something, that's, you don't want to talk to an app. I don't. I want to talk to a human being who can help me walk through that whole scenario. So that's another piece of it, is, are we going to talk to qualified human beings who know healthcare, no health insurance, and can help me navigate.
Well, so what are any limitations, if there are any, of like that care navigation, like setting proper expectations with deploying a tool like that? What won't it do for a group?
Yeah, I think the biggest confusion that people get into, it's not like a 24-hour nurse line, right? And a lot of people think, oh, if I've got an emergency, I need to call this line. Now, if you have an emergency, deal with your health emergency. This is during business hours, when doctors' offices are open and someone can have a conversation with, the billing coordinator, whoever it is. Like, that's when these things happen. So if there is any urgency or immediacy to it, we do have to delineate between what goes through care navigation and what's not a fit. And I think that's the biggest point of confusion, is people think it's teledoc, or they think it's some sort of 24-hour nurse line that's going to help them through, strep throat with their kid. and then kind of redirecting them to, oh, that's not really who you call in this scenario. So that's the big.
Well, so then do you bolt on something like a DPC or a virtual DPC
Yep.
or a telehealth that is 24/7 so that, again, it can triage not the things that are not truly emergent, but might be outside of office hours or on the weekend. You can bolt something on top of that to fill that gap?
Yeah, you're spot on. I think the challenge there is it just introduces another party. You talked about how ID cards look like a NASCAR. I mean, the more you can minimize that, the better, but it's just never truly possible to eliminate all of it into a single funnel.
Yeah. Well, I didn't mean to take us too far in the weeds of CareNav. I mean, I know it's something that you really wanted to talk about, but then there's a bigger picture question here that I haven't really asked you is, why do you care about this space so much, Taylor? Like, what is it about? We mentioned you like to tinker. Obviously, you found yourself in the space, but like, why is this such a big deal for you?
That's a great question.
I'm getting a little below the surface, Taylor. I'm digging a little bit. But I mean, I think it's important, right? Because this space is, you pull your hair out, right? It ages us, and we want to do good. But then there's so many frustrating components of this. So like, what is it that keeps inspiring you to want to do this? Yeah,
one, I think the most interesting piece to me is being close to business strategy. So we talked about this, but very rarely do I talk to clients about insurance, which is odd because I'm an insurance consultant. But more often than not, I'm trying to understand what they spend all day thinking about, which is, what are your capital sponsors expecting from you? What KPIs are you guys optimizing for? What do the next 2 or 3 years look like? How are we going to get there? Not how are you going to get there, how are we going to get there? Like, how can we help aid you on that journey? That's the most interesting part to me, but you'll never meet a person in this country who doesn't have a personal healthcare story.
Right.
And most of them are kind of bad.
Yeah.
Right? Like, most of them are wrought with frustration and, a lack of clarity and billing issues and nightmares and all that sort of thing. And so I get calls from people all the time, particularly right in our busy season during open enrollment season. That's when all my friends and family are going through it. And my phone's ringing off the hook with people who truly just don't understand what plan to select and how to operate and go through all that. So I just think knowing that this is something that's going to impact all of us at some point or another, it's deeply personal to people. I mean, that's the part that feels good, that helps you sleep at night. Especially knowing that you're on the right side.
ClaimDoc is a medical claim auditing and member advocacy company. We provide fiduciary services to employer-sponsored benefit plans and allowing them to create an environment where we ensure that the benefit plans are being charged on a fair and reasonable basis.
My business is basically people, and it become a real simple transition. We thought it was going to be far more complex. I've saved, we'll say, hundreds of thousands of dollars. I could not say enough about ClaimDoc.
The fight.
Well, and you said you listened to the episode, earlier this week with Chris Hamilton.
Yeah.
I see a lot of alignment in the way that you guys operate, and I think it's because you guys both have finance background, right? You said you studied finance, were on a possible track to be a CFO. He worked for a bank for a number of years. There's something about understanding the finance that elevates what you're able to bring to the table for a business owner. So, I mean, it's almost like, is this, and I've asked this question before, but is the role of a consultant morphing or expanding in your responsibility set where you're doing less and less pure insurance consulting and more business strategy consulting alongside of it?
It has to be both. Okay. It's over a $4 trillion industry at this point. I mean, it's a huge chunk of just our country's economy. And so you can't just stay in your lane in your silo of health insurance anymore. We were talking about this last night, why so many of these older independent agencies are P&C agencies.
Yeah.
And we were saying, well, because 30 years ago, there just wasn't as much money in healthcare or health insurance. And so they were much happier to gravitate toward the big autos and all this sort of thing, the cranes and tractors and all that sort of thing, than the health insurance side. And now it's kind of flipped, where there's so much money pouring into healthcare. It's getting more out of hand every single day, that a health insurance conversation is a business conversation. It just inherently is. It's going to impact your balance sheet. It's going to impact your P&L. It's going to have wide-reaching effects on your, like I said earlier, your talent strategy, your ability to attract people. And it's such a cliche in our industry to say, well, I'm going to help you attract and retain talent. That's said all the time, but truly at its nuts and bolts, it's, hey, why did you lose your last 5, employees? Why did they leave here? What are you attracting them with when you bring people on? Because what you attract them with is what you're going to have to keep them here long term, over time. And I think what we try to promote with our clients is just a healthy level of stewardship within our area of practice, but that cascades to the rest of, the way they manage their business.
Well, so then you kind of along those lines is like, where is also the industry morphing to? Because I like to often spend some time on a little bit more ambiguous topic about kind of the future state of healthcare.
Yeah.
Like you have a pretty good handle. I think you have a really good vantage point on the current state of healthcare. But with infusion of AI and
Sure.
private equity money, all the things that are coming in, all the money that's pouring in, how do you see this industry evolving?
So I'm going to answer a question you didn't ask first.
That's great.
Which,
I probably should have asked whatever one you're going to answer.
no, but I have this internal conflict with, first of all, the need for people like us. We're very much needed in the system as it exists today. But if we want healthcare to be affordable and accessible and high quality for people in this country, to me, there's no compatibility with, to me, a private equity firm should never look at a healthcare, vertical and say, God, there's opportunity there.
Yeah.
That means that there's profit exploitation to be had in those areas. Mm-hmm. And that is incompatible with the vision of affordable and accessible healthcare, in my opinion.
Yeah.
If you see private equity people jumping towards something, that's an indication of a problem as it relates to healthcare. Just because other countries view it as a right, there are certain countries that have socialized systems and so forth where it is, you live here, you have access to NHS, or you have access to the Canadian health system, or whatever it is. And for us, we have that conflict where there is this profit motive. So that's the question you didn't ask, which is we're seeing more and more private equity money fly in, which that beast has to be fed. Mm-hmm. It just does. And so unfortunately, I don't see any off ramp to, the rising costs that we have today. Yeah. Particularly you look at the gene therapies, there's a couple dozen drugs that are in FDA approval process right now that are all going to be over $1 million. The black swan claims are going to keep coming. So I think that all is going to be interesting. I do think there are some efficiencies to be found within the AI space, but the last data point I saw on this was that 27 cents of every dollar actually goes to the physician. So I don't think reducing the number of physicians and clinicians that are in a practice, if they're only getting 27 cents on the healthcare dollar, is going to make that big an impact on the overall nut. Right.
Well, and I think and God, there's a lot of ways that I want to respond to that, but I think the one just that you just touched on was that means a lot of it is going to administrative overhead, just like the bloat that happens in hospital systems, happens in, our higher educational system. Look how many people are in these categories that didn't exist 5 years ago where they are administrative overhead, but do they actually contribute to the learning of the individuals? Or there's a bunch of people submitting claims to insurance companies within the hospital system contribute to the delivery of care to a patient, right? Yeah. And so they're necessary based on the system that has been created, but they're adding margin to the overall cost when that's the opportunity that those private equity companies have.
So there's a book. Have you ever read the book, The Price of Tomorrow? Have you heard of
that?
No. Fascinating book, first of all. Highly recommend it. But it was written, I think, in 2020 or 2021 about kind of the acceleration of AI and what that means. Yeah. And I'll spare you the long version of it, pick up the book, but theoretically, all of these advances in technology should send us into a deflationary climate that's actually very healthy. Okay. So meaning by being able to offload a lot of these administrative expenditures to AI, we should be able to lower the price of the commodity so that our dollar goes further. Right. Someone can live a happy, healthy life at $60,000 in the US if the price of all these other goods and services goes down as a result of this improved technology, right? That's a great viewpoint and, pie in the sky idea. But what we're seeing instead is the prices are remaining the same. Technology is making it cheaper to do those things, and the market has not created enough competition to lower the price of those goods and services yet. So all that margin is just being captured by the people at the very top of these organizations.
What is that? I was going to say,
to land that plane, I think that's what, at least for a time, we're going to see in healthcare. Yeah. Prices are going to stay the same, but you're going to see fewer and fewer people seeing the benefit of that money.
Well, it's that whole, it's that really famous sort of XY axis where over time, the cost of goods, and we see this sort of bifurcation of certain things like TVs over time have become far less expensive for incredible technology. Right. And there really is a race to continue to drive down the cost while adding to the things that are bolted into that box. Healthcare is the exact opposite. There are other things. Cars are going up, house prices, and there's other reasons for that. But you would think through technology, those things to trend downward in cost of delivery. And like you said, they're not, right? So where, I guess the response to you is, how do we drive that competition?
Yeah, well, we certainly don't do it through consolidation, which is what we've been doing. I think there's so many physicians now are owned by systems and or insurance companies. I just don't think that an arms race is the way to get there. I think that returning healthcare to the local communities, empowering independent providers and clinicians to open their own practices, run their own practices, stay independent. I think that's healthy for business. I don't see that on the horizon. Not to be overly pessimistic or cynical, but
well, that's Dave Chase's mentality of relocalizing healthcare, right? The health Rosetta model. I mean, just in a term or a buzz term, if you will, makes a lot of sense, right? I think I look at things like direct primary care. I've mentioned this quite a bit. I'm a fan of that. Again, it requires a brick and mortar or a supplement of brick and mortar with a virtual component. But if you can deliver care in a fixed cost model that it's contained, it sort of zeroes out a lot of the leakage that happens naturally in a fee for service system. Now you've got it over here in a bucket, and you really can focus on the delivering of high quality care. You can improve the doctor's quality of life. You can increase the patient's quality of outcomes. The doctor-patient relationship improves. That's, again, one bucket, right? That's a microcosm of the bigger system. But that is an opportunity I see to drive efficiency, drive down the cost, and improve the quality of primary care, as an example.
Completely agree. I've been on a DPC plan for the last 3 years or so, and to say that it's changed the way I think about healthcare is to put it way too lightly.
Really?
Okay. Because it's driven all my behaviors back to the root cause. So now I get my blood work done every 6-12 months, keep tabs on my A1C and what I'm actually doing and how my behaviors or stressors in my life are actually impacting the numbers. So it allows me to, again, as we said earlier, I'm a tinkerer. I like to tinker with those things. Heck, I was talking to one of our partners over at SmithRx recently. I was like, man, I wish we could offer, blood glucose monitors to anybody who wants one. I wish there was an efficiency play where anybody who's willing to get that data and see how their diet is impacting their blood sugar and how it's, responding over time. Like, I just don't understand that. To me as healthcare. Instead, we ignore those things until they balloon up, become large claims, and now all of a sudden you're on the spec report and, we're talking about.
But that would drive a lot of what I really truly, and we'll probably land the plane here in a second, but that drives what I've really been fixating on for a long time, which is the overall average health of the American person, right? And I think if you are getting access to that data that's regularly being given to you as feedback, that's driving behavior, that's giving you insight into the way that you're treating yourself and what you're putting in your body, what the impact is of that. You get that immediate feedback loop. Now, in like sort of microscopic increments, you can change behaviors that have a very large impact over time of avoiding a chronic disease or a catastrophic type injury. So why wouldn't we explore those things? That's where I think technology could actually play a pivotal role.
Well, for sure. And I think to your point, one of the big limitations on DPC is how many patients a single doctor can see. But if you can allow that doctor to maintain relationships with 1,100 patients instead of 600 patients because they have this platform and this technology to offload a lot of the smaller functions, now all of a sudden we're scaling high quality primary
care. Guess what?
care.
You're removing a lot of the administrative burden as well of filing insurance claims.
Bingo.
I mean, boom, right there's an efficiency.
Well, so we actually did an interview with my personal DPC doctor, and he said something that it was the best summary of DPC that I've heard, where we were talking about the quality of the physician. He said, let's back up. He said, I'm no better doctor than Dr. B in a fee-for-service world. He said, but I am a better doctor in my model than I am in a fee-for-service model. So Dr. A is going to be better here than Dr. A over here. And he was like, that's ultimately what we're trying to do, is elevate primary care doctors to perform at the peak of their license, And he said, we're specialists in common problems. And I liked that too. He was like, everybody talks about primary care doctors, family doctors, and then specialists. He's like, we are specialists. We're specialists in common problems, but a lot of people don't realize that 90% of your healthcare needs should be handled by a PCP.
So I guess, Taylor, the really big question for you is, we spent a lot of time here. I think the really, really nerdy folks in the audience would have loved for us to spend another hour going in the weeds like we did. But in the interest of obviously keeping this a cohesive conversation and hopefully one of many in the future, closing thoughts here, man. What would you like to leave the audience with?
Yeah, I think as a whole, as much as I probably put off some pessimism, I am optimistic, and I'm optimistic about the future of healthcare and health insurance in this country, only in so much as, as I mentioned earlier, the quality of the competitors in our industry, the quality of the new generation of advisors that are coming out, they're coming from other industries. They're coming with broad business backgrounds, and I think that's good. I think raising the bar is good. So yeah, my parting thought would just be, as a whole, keep fighting the good fight. If you've got questions, write your legislators. So much of this is impacted at the government level that we're kind of doing the best we can with the system that we have. But no, aside from that, thank you for having me on, and just really appreciate the time.
Well, I appreciate it, man, and the pleasure's all mine. Like, I enjoy speaking with deep thinkers. I mean, we had great conversations about fatherhood off camera, and got to know each other, family, the way that we set up our lives, all those things. But then talking with other thinkers, if you will, in the space that we operate in daily, it's just really fun to sort of mine. I like to also test my own thesis. I like to test my own assumptions, my own biases and opinions. Oftentimes, I have those challenged and find out maybe I'm not as stringent about that belief as I thought, because very smart people are challenging me, and I obviously, present company included, man. So this has been fun. Taylor, I'll let you get back on your way down south of 35, and hopefully, again, like I said, we'll talk soon.
Appreciate it.